I'm going to have them doing just under $30 billion in revenue. I think this is very achievable, and I'm building some safety and realism in my investment. Welcome back in YouTube. As we can see, inflation is still skyrocketing, but I think the market's seeing through this and realizing that inflation is at a peak. We hit 9.1% in June. Expected was 8.8. This is the highest reading since November of 1981. We have a lot to go into, so let's get into it. By the way, if you're new to the channel, consider subscribing and smash that thumbs up. Market is definitely trying to find some footing here, as it's been a crazy day. We sold off right at the bell, and now we're kind of rebounding back up. The triple Qs actually went positive for a quick second. So overall, it's just the market trying to figure out what exactly is going on, how to digest all this information. Guys, what did I tell you to do? Keep an eye on the yields. The bond market is way more sophisticated in understanding than the stock market. The stock market is driven off of emotion. Bond markets are driven off of reasoning, okay? Right now, we are getting a big steepening of the yield curve. We are dipping even lower, guys. We literally have doubled the rate of steepening today. This is a sign of recession to growth slowing down and negative growth. What have we talked about before? We talked about the three month to 10 year. That is absolutely collapsing as well, guys. We do not want this to get inverted. If this becomes inverted, it's going to get ugly. Price volatility in individual stocks and indexes have been absolutely crazy. Guys, I've been getting a lot of requests to do Carnival Cruise Line. So today I'm just going to do a quick analysis on Carnival Cruise Line. I'm not going to get too deep into it. Carnival Cruise Line does rank #1 for largest cruise line. And as we can see, I've done a video on Royal Caribbean. I will leave that up. And Disney's ranked #7. So Carnival Cruise Line is the largest of the bunch. Does that mean it's the best ran business? Not necessarily. So let's get into if it's a good buy and what I would personally pay for the stock. Guys, if you're new to the channel, I'm very conservative in my valuations. It's just the way I do things. You know, I recently did a report on NIO, and because NIO is a Chinese company, because they have very elevated expectation growth rates that I don't know that are sustainable, because there's logistical problems and global tension, I put a very limited valuation on that company, and I don't know if it's going to get a good response. But guys, this is what I personally do. When risks go up, I have to put valuations lower to minimize downside risk for me personally as an investor. So with that being said, we're going to dip into Carnival Cruise Line, and I am going to be fairly hard on this one, as I'm pretty sure the cruise lines are in a little bit of trouble with the amount of debt a lot of these cruise lines are carrying and possible talks of recession. So we have a low of $7, an average of 15.7, and a high of 37.8. Looks like they're going to do right around 15 billion this year, still be negative EPS, and go into positive earnings per share next year in 2023 with roughly 54% revenue growth and getting back to their normal revenue rate here. So you know, looking out, I think these growth rates are okay up until 2025 and 2026. I think these are pretty lofty expectations for people to just start hopping back on cruises and getting back to normal. So I'm fine with getting things kind of back to normal, getting above that 20 billion in revenue by 2023 and 2024. I don't know if I feel comfortable going as far as to say that they're going to do over $30 billion in revenue in 2025. Because if we go through history, they basically have done about 15 to 16 billion in revenue and started getting some good growth in 2017, 2018, and 2019 being their best year of just under 21 billion. So for them to come out and start ripping up to 25 and 30 billion, to me seems a little lofty. But I'm willing to say that by 2030, they're probably going to be pushing close to 30 billion to 35 billion in revenue. When we try to figure out an EV to EBITDA multiple, we can see the sector median is 8.5. Historically, Carnival Cruise is traded between a 9 and a 10. So we're going to give them the benefit of the doubt that they get things up and running, and we'll give them a 9 times multiplier. So guys, a lot of different ways you can kind of talk through Carnival Cruise Line here. Anybody can kind of build their model in a specific way. For me personally, I'm building some safety, adding some shares onto the market, roughly 5% year over year, as they do have a lot of debt, and I think they're going to have some serious turmoil ahead. So I want to take into consideration that dilution is definitely a possibility for this stock. Now to get to a $30 billion revenue per year by 2030, I used revenue growth of 120 year over year for the first 3 years, which gets them back to their $20 billion in revenue basically by 2025. So it's going to be, you have to understand that they were only doing 1.9 billion in revenue in 2021. So for them to get back up to $20 billion in revenue, they have to explode revenue over the next 3 years. So what we did is we got them basically getting back to more of a normal revenue rate by 2025. And you can see down here we have 21 billion, and that's just about what they did in 2020, or that's just about what they did in 2019. So we're going to give them a few years to get back to 2019 levels. Then we have them growing at a modest 7% growth rate and a 6% growth rate going from 6 through 10. Now I want you to understand that I'm undershooting estimations here, as a lot of people have them pushing 35 to 40 billion in revenue by 2030. I'm not going to put those numbers out there, guys. I'm going to have them doing just under $30 billion in revenue. I think this is very achievable, and I'm building some safety and realism in my investment. Getting an 11% rate of return, I am basically looking at an $8.45 to an $8.50 price target here, with a fair value of between $14 and $15 in 2030. So guys, this is me being fairly conservative and realistic, using a 9 times multiplier. Now, if you want to think that there's this huge demand for growth and that they're going to keep double-digit growth going over the next few years, I can add, instead of 7%, I can put 10% there. And instead of 6%, I can put 8% there. And you're looking at an $11 stock and a $20. And you're looking at an $11 price target with a 2030 value being with a 2030 value being a little over $19. So guys, that's how I arrived here. I think where the stock is trading makes a lot of sense. Me personally, I would actually probably build a little bit more safety, looking for a better rate of return, and I would probably try to buy it in the low 8s to high 7s, guys. That's where I think the risk versus reward is possibly worth taking a dive into Carnival Cruise Line, as they do have a lot of debt. There's a lot of uncertainty in the world. We don't know if people are going to go right back on cruises. I know there's this pent-up demand for travel, but we don't know if that's sustainable pent-up demand going 5, 10 years out. So I don't want to overhype anything. I try to be very level-headed when I do these analysis. So guys, this was Carnival Cruise Line. Hopefully you enjoyed my dive in. And as always, guys, appreciate your time. Consider subscribing, smash that thumbs up, and we will see you next time, investors. Peace.